what's the PCE plus or minus? In other words, where the market gets spooked or the market goes back to buy the dip? Like, what's your level on that?
Yeah, so market, let me just pull this up right here, but market is looking for core PCE at 0.2% and the overall at 0%. That's the monthly. And year over year core down to 3.3%. So if we came in at 0.3, clearly like anything above 0.2, I think is going to be something that people have to, get a little bit concerned about. Based on where we're pricing in a 90% chance of a cut in 2 meetings. The big data point that I'm looking for is the super core number, which in the month of July was 0.4% month on month. And then that was the last month we had a very sizable risk asset gain. And that fell in August to 0.08% month on month because the markets were soft. And then in October, when bond markets were really soft, it was 0.15%. So I think if this reaccelerates to 0.4 or above again, then you're talking about super core annualized 1 month inflation, anything above 0.4, you're talking about 5%, right? So that's a data point that I'll be watching. I'll put it in the chat, but if it comes in hot, then it's going to be hard for the Fed to say, look, we've got this. I mean, super core, core services X housing, that's super core. That is kind of everything else. That's not energy. It's not housing. It's not goods. It's kind of, it's food service. It's recreation, transportation, healthcare, right? It's the stickiest part of the inflation, which is why the Fed has talked so much about this. It was the third pillar of inflation. Now they've kind of forgot to mention, they keep forgetting now because obviously it's convenient to say that they've been successful. But if that number, people will push back if that number is hot again, which I think there's a chance it will be.
Interesting. All right.
This short clip is presented by Edge. Edge is our pro-to-pro advisory service, which is all about the macro with a focus on one-to-one engagement with the hedge fund manager, Craig Shapiro, and direct access to LaDuc Trading founder, Samantha LaDuc. For more information about Edge, visit www.laductrading.com/edge.
So I just want to show a very messy chart, but I'm going to do it anyway. So this is the intraday SPX chart that I show in the trading room, but this is on a 2-hour. And the reason I bring it up is because given PCE tomorrow and such, this is what happened
PCE's
today.
on Friday, just FYI.
PCE's on, sorry, I'm already pushing toward the holidays.
Yes.
Just finally got the tree last night, by the way. That's how busy it's been. So here's today's action, right? You can see that we did fill this gap that we had from Monday the 18th. And this is kind of a level where we needed to stay above if you're bullish. Well, we broke and closed below. Here's the level that I'm talking about where we could see VIX above 14.5 and volatility above that will create some, drama in the marketplace. We don't typically go straight down, but putting it out there because we really ground higher and higher and higher for weeks on end. And then the JP Morgan stuff, it's, as you said, 45.15, but it's down in this neck of the woods. All of this other stuff, and I just kind of show you because this is, kind of a lot of lines here, but it basically means that we've had gaps that filled, and everything that's a dotted red line, check this out, all the way down to 4,000. You can't even see it. It's actually below. Trust me, it's down to 4,000. These are the intraday gaps. This is how crazy bid it has been since this, basically right here, November 1st, right? Fed intonated pause and QRA, more T-bills than bonds. So this is starting to finally roll over. And this is the level of concern. And this is basically down here is the top of that put spread for JP Morgan. So that would be a lot in the next 10 days. Obviously, thinly traded. What is it? 6 trading days. No, we have 4, a full week. We have 4 next week, correct?
Yeah, 4 next week and 2.
Yeah, so we get 6 trading days.
Yep.
That would be dramatic.
Agreed. Unlikely.
Okay.
But and then we walk in January. right away, we're back into the data, right? We get ISM first, on the 3rd, and we have all the labor data, and then Friday the 5th is I think it's Friday the 5th is payroll.
Non-farm
So
payrolls.
we'll be look, the Fed had been very concerned about growth momentum through November and even into this meeting, but I don't know, the data is starting to look better. Real GDP, Atlanta Fed GDP, it looks like 2.6% right now for the fourth quarter. Yes, down from 5.2, but up from 1 where we were, a month ago for the fourth quarter. So the data looks okay.
How are the auctions? No, that's next week. Did we have any auctions?
No, we had a
of
20-year
note?
auction. We had a 20-year auction today, which was not great, but didn't really matter too much because there was clearly a risk off dynamic that unfolded throughout the rest of the day. So we don't
I'm
really
just curious because it was at 1 o'clock and the
Yeah.
selling started in earnest at 2 o'clock. So
Yeah,
just trying
yeah.
to
I was
time
I
what
was looking
happened.
at I was watching the auction and talked about it in the chat, but it did. I even tried to short some bonds into the auction and it came in poor, and then all of a sudden we got steamrolled. but
Yeah,
but
it became a risk
it
on,
got steamrolled because of the risk off
yeah,
sentiment.
yeah.
So
When's the next 30-year auction?
I think we're through. We're not until I think the second week of January.
Okay. That'll bear watching because
Yeah.
it did so poorly last time.
Yeah, look, the Treasury's got a lot of debt to sell next month, and every month, for all of 2024. So, these will be, all interesting to see. And the biggest thing will be now that term premium has moved back to negative and bonds have rallied as much as they have and yields have come down. Does Yellen now decide again to, raise the amount of duration issuance after she cut it back? I mean, she has said that to expect another quarter of additional increases in duration. That's what they said at the last meeting. So at the last TBAC meeting. So it's likely we're going to get it's likely we're going to hear that they're going to be doing more duration issuance for the next quarter. It's just a question of how much is priced and how much does the market, believe. We'll know, when we get closer, we'll talk more about that data point. But after the big rally we've seen in bonds, I mean, she would be an idiot not to try to sell some more duration here. Eventually they have to they have to term some of this debt out. We can't just be operating in an environment where we continuously are funding the government on a very short term, basis. That's what an emerging market does. That's the United States is not supposed to be an emerging market. If that's the plan that we're going to keep doing that, we're just going to refi and finance all of our debt up in the front. The dollar is going to get destroyed. And maybe that is ultimately the plan here. You don't really hear a lot of folks in the administration talking about that, but if ultimately that is the plan, then we need to be thinking about that as investors and as citizens and what that's going to mean with a much weaker dollar, what it means for inflation, what it means for, hard assets. And, I think that is going to be a big theme for 2024 is hard asset outperformance, on back of a weak dollar, backdrop. And it might not be a weak dollar versus the euro or versus the yen, because those are, even crappier, countries, but it will be weak versus real assets like gold and like oil.
We still haven't fallen out of play or favor for that matter, but this is the dollar, right? It's definitely come over. We're in trouble, once we break down and stay below 100. This is where we stopped going down right before the QRA issuance of August 1st, right? So we definitely, this level is going to be very important in the coming months. This is the daily, but yeah, that's a very key consideration. Also, just looking ahead at the calendar, you mentioned this stuff basically till end of year, and then on the 3rd we also have the minutes coming in for FOMC.
Yeah.
So I don't know if they're going to say anything different, but it always bears watching.
Yeah.
All right. So we have the kind of macro stuff that is focused on continuing economic data, and then the interpretation of the Fed pulling hikes forward and cuts forward and whether or not they actually follow through. And then tons of flows, which is waning into the January options time frame. All those leaps come off, et cetera. So we really are looking for a macro trigger, basically. And then today we didn't have a macro trigger. It just basically got a case of vertigo, looked down and said, and VIX spiked. And on cue because of market structure, but that was already like expected. Like it's gonna give sway at some point when you least expect it. Boom! It was today. It could have been tomorrow. It could have been Friday. It could have been next week. But you knew it was coming.
Yeah, I think we like to try to tie it to some fundamental explanation of why, right? The market and the narrative. But I was listening to even on TV. The one of the rationales for today's weakness was that markets are going down because the Fed will disappoint relative to what's priced in. More cuts are now priced in at 4 o'clock today than 2 o'clock. That is so definitionally incorrect.
Wait a minute. Exactly. That's a good catch.
The narrative on TV was, well, the stocks are going down because the Fed's not going to be delivering the cuts, yet the bond market said the Fed's actually going to be delivering more cuts now that stocks are down. So, talking heads try to ascribe rationale to what is a very flows dominated tape. And, in light of the zero data expiry crowd and, the year end stuff, it's, sometimes there is literally just no other explanation except what you said earlier, which is profit taking, or we hit a level, or more flows.
I really think that's it.
And trying to ascribe some sort of fundamental rationale is a fool's game sometimes.
The full episode is available to Edge paid members. For more information, visit LaDucTrading.com/edge.